Crisis conditions have put an end to risky trading for many investors, and this is showing clearly on the currency markets. The Japanese yen, a sought-after safe haven, has soared to a 13-year high against the dollar. Well, for more on this, I'm joined by Keith Miller, a currency strategist from Corporate FX. Keith, thank you so much for being with us. What on earth is going on?
It's a crazy situation out there. Effectively, what is happening is risk aversion. The carry trade is unwinding in unprecedented forms. We've still got a lot more to come in this. What we're seeing is people that have effectively used the yen and the US dollar to take on higher yielding currencies, such as the Aussie and the Kiwi. They're unwinding those positions, and as a result, the yen is definitely leading the race in this strengthening league, if you like, and the US dollar is very close behind it.
What about within Europe itself? Let's take a look at the sterling. It was not too long ago we were looking at 2.11 to the dollar. Now it's down at, last check, it was 1.54 to the dollar. And it seems to be on a downward trend here.
It is, and news from the office is saying that it's even lower than that now, around the 153 level. Okay. You're right. 25% has been gained by dollar over sterling over the last number of months. Even this week, we've seen a 20-cent move on that. That's causing an awful lot of panic in the markets, and what we've got to look at is how that reflects onto the real economy. Businesses are in array at the moment. There's no stability. There's an extreme amount of volatility out there. People are panicking. People in the US, exporters in the US, they're not going to welcome this move. They're looking to export their products over into Europe, into Asia, into the UK. And with these price falls, it's simply not going to happen.
Let's turn it around to the other side then. What about within Europe and Britain in itself? Is it good for them?
It depends on what side of the fence they're on. If they're exporting to the US, of course, they're in a very strong position. If, however, they're importing from the US, whether you're in Europe or whether you are in the UK, that's where the problem lies. And people do have to be brave. They need to take on the sentiment that everyone else in the world is taking on, and that is risk aversion. They need to protect their risk. This is no time for bravery. They need to protect their risk and ensure that in a few months' time, or even a few weeks by the looks of it, we're not looking at the high 140s.
When you're at your desk and you're looking at these numbers fluctuating, a matter of minutes, let's not talk about weeks and months here, but in a matter of minutes, are you in a sense of disbelief?
We are, and we're trying to ensure that particularly our clients are protected, and we cannot believe it. We've got some of the best strategists in the city sitting on our desks, and they cannot keep a hold of this. They cannot keep up with the pace of this. And if us being intrinsically involved in this are like that, then what are the companies out there thinking? So
if you look at what has happened over the past week and the trend that has taken place over the currency markets, and if the markets as a whole over the past week, and you look forward to the next week, what are you looking at, and how would you predict? Can you even predict it, because it's so unpredictable now?
Anyone that predicts anything at the moment is putting their neck on the line. Or you can weigh up the upside versus the downside.
Because there's certainly some opportunities to come.
There's always opportunities. In adversity, opportunity always comes. However, I think if you're asking me where this is going to continue to go against the dollar with sterling, a week ago, 150 we were expecting it to happen quarter 109. This is where we are now. Where we're going to be next week, no one really knows. We could well be in the high 140s. We had a very strong psychological resistance at 160. Yesterday, we tested it a few times. This morning, we've come in, and it didn't exist. That level of support did not exist. We went straight through it, and now we're sitting at 153.
Even if you're not an avid market watcher, I think these days, it's sure to...
It's risk aversion.
Sort of shock a lot of people.
It is.
Keith, thank you so much for your time.
Thank you very much.